Hey guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekly stroll around the markets with yours truly, where I share a few of the top trading ideas that are on my radar for the week ahead. Today, we've got a lot to talk about, including some of my favorite trading stuff, advanced patterns like the Cipher, the Bat, the Butterfly. We're gonna talk about structure, Fibonacci tools, and even how the ability to read candlesticks can improve your directional predictions. We'll also touch on trading psychology, the anchored volume profile tool, and how higher time frame analysis can be the secret to unlocking bigger than usual trading opportunities, or at least getting more out of the trading opportunity than you thought you might be able to get. Now, before you forget, hit that like button, subscribe if you're new. That way you don't miss any more of the amazing content that's on this channel, and let's get into it. Dollar Canada has an interesting setup. It has an advanced pattern formation setting up on it, but it's also an advanced pattern formation that we can do a little bit something cool with. So let's start off by drawing out the pattern. This is going to be a bat pattern. Once again, I'll measure it out and walk you through it. Our swing low to swing high. This is our starting point, right? This is going to be our X to A leg. This is what kicks off the pattern. My advice, find this first. Don't kind of reverse engineer the pattern because you're going to end up forcing it. Always start with X to A and then work in order. So swing low to swing high, X to A. First retracement right here is going to be our A to B coming into that 50% level. Our failed extension is going to be our C leg. And if we come down to this 886, that is going to be the starting point for our bat pattern completion. And if we look left, it's at a pretty decent level, as this is also the most recent pullback, right? Price consolidated, did the, let's do the dance, and then we came up, putting in a structure high, and then we retrace, putting in an outside return, and then we came up, putting in a new structure high. This would be no different than any type of retracement in the market. Now, here's where things can get pretty cool and also a little bit complicated, but more cool than complicated. If we look at this on the daily, and we go through that boring, repetitive, but very consistent and profitable four-step process, IPDE, this is going to tell us a lot about the market. So if you guys are new to the channel, welcome, by the way. Subscribe and follow. That way you don't miss any future videos. But you'll see that I follow a four-step process called IPDE. It stands for identify, predict, decide, execute. I want to identify what the market is doing, what has the market done. Based on that information, I can then make a prediction on what I think we're likely to go next, as far as like what direction, and if we go in that direction, where are we likely to go next? Then I decide, can I enter this trade, right? Is there something in my trading plan that allows me to get involved in this move? And then finally, E is execute the order. That is me telling brain to shut up and get all those weird feelings out the way and just push the darn button that says buy or sell. So I want to start off by asking myself, where is price action at? Well, I draw a horizontal line in right here and I look left. I say, okay, well, that's interesting. Price action looks to be above a previous level of structure. Now, let me just ensure that we are. And at first glance, it looks like we obviously are. But remember, we need a break and a close above this level. And it kind of looks wicky. It's getting wiki. Sorry about that. Couldn't help myself. So let's zoom into this level real quick and ask ourselves, did we actually break and close above? Well, this candle, we did not, right? We spiked above, but did not close above, right? Tier 1 members, this is why we harp on this in the very beginning of the courses. Understand the difference between a spike or a test and a violation, because it will determine what signal you are getting, which will determine what trade you are taking, which will determine if you're profitable or not. So this is going to be no to a violation. Okay, well, what about this next one? We wick above as well, but it's a red candle. We close down here. No. So you look at this next one right here. You say, okay, well, Akil, we got it. We got it. This green candle is obviously the body has closed above this white line. We finally got our mark. But wait, do we? Something that we always get questioned on for newer members, right? There's always a Q&A session about this every single time we get a new flock of traders in, is how come this is not a break and close above? And the answer is simple. Once we create these new highs, these become the new high watermarks that need to be broken and violated. And you can see that this candle actually doesn't. If you don't believe me, I will show you, right? The close of this green candle right here is 140.33. I don't care about the little micro pip. That 9 means nothing to me. The high of this candle is 140.34. the high of this candle is a single pip above the close of this candle. Now I know what you're saying, Akil, close enough. Just count it. No, this is why we have rules. Now, if you want to create a close enough rule, do so, but it still needs to be a rule. My rules are black or white. Either it did break and close above or it didn't. Like there's nothing is up for discussion. It doesn't matter what I want. It doesn't matter if I'm scared, if I'm greedy. It either did or didn't, and for me, it did not. So unfortunately, that's not going to be any violation. Luckily, on the very next candle, we did get a violation right here, right? You can see this one clearly closes, maybe not clearly, but you can see it when you look at the numbers, closes above here. So we do technically have our higher high, higher close. It's not a very sexy candle at all. I don't personally have a rule that says if it's this type of candle, then it doesn't count as a higher high, higher close. Again, it's black or white. It closed above, so therefore it closed above. Very simple. So what that does is, right, identifying that close above allows me to make a prediction that price is likely to go higher. And now I want to ask myself the question, if price is likely to go higher, then where are we likely to go higher to? And I'm going to go back in time, and I'm going to see that our next level of structure is going to be in this area right here, right? If I just mark my charts up, right, do this and do that, right? This is a great practice, by the way. Like, just mark your charts up and you're going to be able to see, right, where the important levels in the market are at, right? You can see that, hey, I've got a spike down here, therefore that must be an important level. Hey, I've got 3 spikes right in this area, right? That must be an important level. You can do all the other stuff we did in the Aussie Canada video with our CTS and bring in fibs and volume and all that stuff as well. But for me, structure is the first clue. So just to kind of give a broad area, right? I don't feel like digging into the specifics of this zone, but we know that at minimum, if you're very conservative, you would expect price to come to this level, at maximum to this level right here. And what that does is that if we go back to our bat pattern, right, which happens to be at a previous retracement as well, you can look to not only take this as a bat, but potentially take this as a trend continuation trade up to this level, which looks to be a little bit above a 127 and a little bit below a 1618. If I just measure that in, look at that, right in there. So again, we'll dive into more details as the week goes on if this actually fills, but a good idea on how to take a pattern trade and use the information that the chart gives you to potentially put yourself in a situation where you can turn it into a home run trade. Euro Aussie, pretty decent move to end the week. You see price came right into a previous level of structure. Structure whipped its behind and sent it running in the opposite direction. Now, I know what this looks like. It looks like a falling knife. It looks like a runaway train. Oh, Akil, there's 3 red candles in a row and they're so big, they're scary. How can you possibly think about buying? Well, let me tell you how. 2 reasons, right? 1, this selling isn't going to last forever, and those who made a lot of profit selling at the highs are going to cash out at some point. And the question is, where are they going to cash out at? Well, they tend to cash out at levels of danger. So levels in the market that price has respected before. And if we take a look at what's happening in this zone, I think you're going to see exactly what I'm talking about, right? So let's take this last retracement, right? You see price action came up here, boop. We retraced down here, bop, before extending up. If I just take this square and move it to the left, let me know what you see. Matter of fact, let's do it like this. Let's play like a metal detector game, and I'm going to make a beep every time we hit structure, right? Doot, 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 beep, 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 beep. Previous structure in that level. Doot, 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 beep, 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 beep. Previous structure in that level. Boop, 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 beep, 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 beep. Previous structure in that level, right? Do you see what I'm doing? I can keep going. I can keep going. This has been a level that has proven to be respected in the past. I have no doubt that sellers will be looking to take profit at this level. And what that would do is, 1, it would dry up the selling pressure, right? Less sellers in the market. And 2, there's a chance that we see increased buying pressure. We see that for 2 reasons. 1, buyers that bought it all the way up to this level, it's now coming back to a level where they said, hey, this is cheap. Maybe I should buy it again. 2, when the sellers are taking profit, what do they have to do to get out of their selling positions? They have to buy, right? So sellers are becoming buyers and potentially more buyers are interested in well. So all in all, a pretty good level. So structure-wise, I love it. I wonder if there's anything else here. And again, when I do these videos, guys, I look at the charts for the first time. I don't mark it up because I want to make this as live as possible for you. You guys don't get a chance to join me in the live room. So for a lot of you, this is the closest that you can get. But if you ever did want to join me in the live room, if you ever do want to join me in the live room, you can do so. Head over to www.tier1trading.com. We have a London room. We have a New York room. We run them 3 days a week. It's an awesome environment where you get to be with myself breaking down charts, as well as a group and community of traders. So if you're a loner out there and you don't have anyone that you can share your passion with, check us out, join it. It is part of your trial membership, so it's risk-free and you don't have to worry about getting auto-billed or anything like that. We just don't do that. If you want to stay, you stay. If you don't, then I hope you enjoyed your experience. But I'm going to guess there's going to be a 382 Fibonacci retracement in here. So if I take my Fibonacci retracement from this ultimate swing, right? The swing low to the swing high. Oh, look at that. 382 Fibonacci retracement right here. My guess is, I would guess there's going to be a big block of volume. I'll be interested to see if there's any type of standout between a certain level that I'm going to tell you about next. But let's see if there is first. Look at that. Volume starts to pick up right in that level, right? You can see kind of the void low volume here. And then we start to pick up right below 179.5 and 179 even. It's actually a little bit more impressive, a little bit lower, which could be a little bit of a warning sign for stop losses. But you can clearly see that we're coming into a level that the market cared about in the past. So I think this is actually a good level to look for potential shorts, a pure counter trend trade. If you want to be conservative, let me delete some of this stuff. Wait for price action to come down to this level. You can see the RSI is already oversold, so we're overextended. Wait for something like a double bottom. Wait for a little bit of a retest there, a little bit of a run right there, and then a retest. And if you get that secondary hold and ideally equipped with some divergence here as well, that could be a good move back up. Now, again, we're not looking for a continuation here because this level never broke that previous level of structure, but you could look for a nice little counter trend trade back up into the structure lows right here. So about about 180. Not bad. 179 flat to 180 flat. Little hundo pipper there. Silver. Took a while, but we're finally catching up to gold. Just real quick, I want to show you on the weekly where we're at with silver, right? Silver has been lagging behind. We hadn't made new highs, but guess what? We did last week, or I guess the week before last week, depending on where you're, how do we count this week? This is still the week. So I guess it was last week, but the trading week has ended. So is it next week? Anyway, we made new highs a weekly candle ago, and then we made new highs again on this weekly candle before starting to see a little bit of a pullback at the end of the week. So if we go down to a daily chart, and let's go down one more actually to a 4-hour, you're going to start to see something pretty interesting. Again, if I just draw out my ebbs and flows here, flow and ebb and flow and ebb, right? You're going to see that price action made a new structure high here. We're coming right back down into our previous outside return. So if this trend is going to be intact, this is a level that we should have some or see some importance at, right? The bulls should try to protect this level, and they started to do that to end the week. Something you can look for here is another double bottom. It may stand out more on the hourly, but you have your initial test right here. RSI did go oversold, right? Deeply oversold. My oversold settings are at 20, so they're already a little bit extreme. We went down to what, like 5? I can't even put a thing here. Like 9. That's pretty oversold. We have a little bit of a reaction off of that. What you would look for is one more retest, a little bit of proof that the bulls are holding and protecting this level. And then boom, that will give you a nice opportunity to buy. And because silver is an overall bullish trend, this is not one where you're looking for kind of a short little counter trend type move. You're probably looking to hold this on for future highs. Like many pairs, you can see the pound dollar has been in a period of consolidation. If we just look at the last really 3 candlesticks on our chart, you can see they have long wicks, some to the upside and to the downside, some longer to the upside, shorter to the downside. But in all 3 of these cases, the market hasn't really made a clear determination of which way it wants to go. So therefore, I'm anticipating consolidation on this pair. And of course, whenever we have consolidation, it tends to breed advanced pattern pattern formations. So going down to the hourly chart, that's just what we have. We have what's called a Cipher pattern setting up. Now, typically we hear about W and M-shaped patterns. Those are going to be our bats and our Gartleys. So patterns that form like this, they look like the letter M. When they are bullish patterns, they look like the letter W when they are bearish patterns. The Cipher pattern is going to be a little bit different. It's pretty much going to look like an AB equals CD pattern with an extended move after that D completion. And I'll show you exactly what that looks like. I'll keep it short just for purposes of this video, but as I draw it out, you're going to see the Cipher, and let me just use the Cipher tool here so you can see the ratios. It's going to start with a X to A move that goes down. That's going to be our impulse or anchor leg as usual. We're going to get a retracement up here. We're then going to get an extension, again, that AB equals CD type of pattern. And then for the D completion, we want to see a move up to the 786 retracement, and the zone between the 786 and the high of our X leg, this is going to be the area in which we're going to look for shorts. So keep your eye on the pound dollar hourly for a potential bearish Cipher pattern. Euro yen has been another one of our consolidating pairs. This one specifically came after a big gap in the market, and as the market started retracing down to that gapped area, you could see it just kind of moseyed on along. Now, this is going to be similar to the pound dollar as we go down to the hourly, as there is going to be a potential bearish Cipher here, but we're actually going to have a 2-for-1 type of setup here, as there's going to be another advanced pattern that exists as well, or another potential advanced pattern that exists as well. So let's start off by measuring out the Cipher pattern. Again, let me just get the Fibonacci on there, then I'll walk you through it. Swing high to swing low, our X to A, our first retracement, A to B, extension down here is going to be our B to C, and a move back up to this 786 is going to be our D completion, with the zone of completion projected to be anywhere between the 786 and the X leg. Now, if I zoom in a little bit more, we have a potential butterfly pattern setting up as well. Now, the butterfly pattern is a little different than the Cipher, and it's also a little bit different than the M and the W pattern I shared with you earlier. It's similar to the M and the W pattern, but with an extended move that goes past the M or W part, and that will make sense when I draw it on. So let me just get my Fibonacci inversion here so I can draw the rest of it on for you. Our butterfly pattern is going to look like this. We're going to start off with an impulsive move, so that same type of swing high to swing low as we did with the Cipher. That's going to be our X to A. This move back up here, this deep retracement, is going to be our A to B. Our secondary retracement, so our failed extension downward, is going to be our B to C. And with the butterfly pattern specifically, this is a really awkward pattern because the range of rules is so big. And if you guys listen to not the last Trading Coach podcast I did, not the one on secrets to learning, but the one I did before that about confusion on the markets, this is exactly what that trader was talking about. He said, hey, Akil, one of the problems that I deal with is that I go to different places in the social media universe or the internet world, and I get different definitions for different things, and it makes it really, really, really hard to understand. And that's probably one of the biggest issues we see with traders. In fact, I was just speaking to a trader earlier on the platform who is taking the training courses with us, and he was saying, hey, I'm going other places as I take your courses, and I'm getting different examples of the things that you're talking about, and now I'm getting confused. And my advice is this. When you are in the learning phase, because it's very easy to get overwhelmed, and there is no set dictionary in the trading world, whoever you choose to get educated by, whether it is someone on the internet, whether it's us at Tier 1 Trading, whether it's anyone else in the world, I would dedicate your learning period to focusing on only what they are teaching you. That doesn't mean that the other stuff isn't important, but you don't want to get overwhelmed. So understand and focus on what they're teaching you. Once you understand it and have a better knowledge of it, then you can go to the other places and things are going to make more sense, because what you're going to see is that they're often talking about the same thing. They just may word it a little bit differently. So that's much better than trying to learn from 18 different places at once, getting information overload and having your brain explode all over your computer. So take my advice on that. For me personally, the butterfly pattern, I like to look at it at a 127 inversion, which is going to be up here. And you can see we do have an overlapping completion zone. The butterfly one starts a little bit higher than the Cipher, but you have both of these potential advanced patterns setting up in the same area. Next is going to be the pound yen consolidation as well, but not an advanced pattern formation that we're looking for here. I'm actually looking for a structure-based trade. Price has come back up to a pretty significant level, an interesting level, one that I have my radar on, and so far we have held. If we can violate this level, meaning if we can get a break and close above that line I just drew, I would actually anticipate that price continues up. So look for a break and close above that level. For me personally, I like to look for a pullback, but for you guys that have been playing around with volume after we mentioned it in the live room this week, this is a perfect level to look for a volume spike as well. And again, if we get that breakout on high volume, that's a better sign that it's less likely to be a false breakout and it is to be a true breakout. But if you're looking for confirmation, break and close above, I like to wait for pullbacks, and then I'll be looking for a move back up to these highs. And if we take one more look at it on the 4 hour, you can see this consolidative zone right before the elephant candle, which is the big candle right here, is a good level to look for price to come to. 203s, yep, psychological number as well. So 203s if we had to kind of pin down a level that we're interested in. In fact, let me do one more thing real quick while it's here. I don't think we have an AB equals CD pattern, but it looks and it smells like a 1618 Fibonacci extension. ABCD is going to be a little bit short right at the low of that zone, but I bet this is going to be a 1618 Fibonacci extension. If I take my Fibonacci extension tool from the swing low to our most recent swing high right here, because this one is still in progress, and back down. Oh, I knew it. Look at that. 1618 Fibonacci extension right below that 203 even handle. Again, just like the CTS video I put up this week on the Aussie Canada, just building our case for entry. In this case, building our case for potential exit for targets. Aussie dollar, another consolidative pair. You can see we had a nice bat pattern earlier in the week here. We are now converting that right into another potential butterfly pattern. Now, you guys know I'm not a big fan of the butterfly because the D completes are above the X and it's all weird with like targets. But if you look at a situation like this, our D completion, our projected D completion at least, would complete right at a previous level of structure. So you got a nice little area of protection to hide your stops above. So it is a butterfly pattern, and it's actually a decent looking butterfly pattern because the D completion would complete, how many times can I say complete, right? At a level of structure that I would be looking for shorts at anyway. So good one to keep an eye on. Hope you enjoyed the video. Leave any questions and comments below. A question that I commonly get is, Akil, what should I be looking for in a trading computer? And instead of giving you a whole spiel on that, I'll make it simple. There's a QR code on your screen, scan it. There's a link in the description box below. Link it, click it, whatever you do, and it's going to take you to a free trading computer builders or buyers guide that will tell you everything you need to know about what you need to consider if you are looking to buy a trading computer or looking to build one yourself. It's 100% free. It is my gift to you from me. And until next time, plan your trade, trade your plan. Take care. I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.